Dover here. I am the head trader and founder at Pollinate Trading, and I'm going to go over some crypto this week. And I got a lot of good feedback when I did the bar by bar replay, kind of going through the mentality of what's going on Bitcoin for the last 10 years. So I'm going to do it a little bit faster this time, but I want to really point out where we are, what's going on, and what I expect in the future. So currently what we got up is a monthly chart of Bitcoin. Each bar here represents one whole month. So this was July. This is currently August, June, May, April, March, February, January. So this is all of 2018 right here. So it takes up a lot, monthlies take up a lot of space, but they're quite useful. And let me make sure I have my trusty favorite tools on the screen. We're gonna go ahead and dump the SQN. And the first thing I want to point out is, okay, as I've done on previous, and I mentioned this quite a bit, but 10,000, anytime 10,000 is in play, that is, it's touched, a 6,500 point move is an average move thereafter. So you can see that it didn't happen these first two times, and it's just starting to happen now. So in July, we went 11.4 all the way down to 9. So it was only a 2,500 point move, but that kind of puts 9,200 is the median area basically of all that, but let's just call it 10. So a move to 16 is currently in play, but that could also be a move down to 3,500 in play, and any derivative thereof. So we're currently at about 12. That could take us down to 5,500 and still be a 6,500 point range. So what I want to say is that I'm not the only one here. Like, this is pretty obvious that the crypto bull move is back on, at least. And the reason I want to point it out, there's a couple of things here. So all I'm looking at is these bars that are in white are up bars. These bars that are in black are down bars, meaning price opened at the beginning of the month here and closed at the end of the month lower. On these bars, price closed at the lower end and opened at the low end, and it closed at the high end. All they are is just directional, right? A lot of times it's red and greens, it's yellows and reds. It's red is just kind of a color that, well, I'm colorblind, so this is just an easier contrast for me, I guess is the best way to say it. So that's why I do the black and white. I suppose we could do, all sorts of other colors, but it's just much simpler for me. So first thing I want to look at on price action is what's really noticeable is these wicks. So when a candle opens at the bottom, goes all the way to the top, and then closes all the way back down, you leave this wick, and the wick represents the distance that it has traveled. And when you have wicks on top, especially bigger than the wicks on bottom, that's generally a bearish candle. So you see the candle bodies are bigger down at the bottom range, and then the wicks are larger here on all these back in 2019. That's a very bearish trend, okay? When you see the wicks, or let's call them shadows, or they're often called shadows, down at the bottom and they travel up, that's a little more bullish, okay? And here's a nice bullish hammer represented. You can see all along where it's a little more bullish. It doesn't mean it is bullish. It's just generally bulls are coming in. On this one, bulls ran it up 14, and bears came in and said nope, and they stomped it down. And bulls tried again, they stomped it down. Bulls tried again, they stomped it down. Bulls tried again. And finally, you get around the 7,000 area, it kind of evens out. Now, what happened in March is we had that big market meltdown, and every risk asset was affected by it. One thing that's interesting right now, is that the we had this major flush out, and now we have a similar. We're very correlated with Bitcoin and like gold and the Nasdaq are very correlated recently, and we got that bottom in March. One thing I want to point out is this is the ATR. Okay, the ATR measures the average true range, so the average range of the last 14 candles. And typically when it's down, that means the range is tight. And when it's high, that means the range is wild or volatility is higher. So with a high ATR, your volatility would be very high. With low volatility, or low ATR, the volatility is low. So there's some characteristics here that I want to talk about. Markets don't top on or bottom on low volatility. Now they may base and start to kind of, figure out what's going on and start to head in another direction slowly, slightly, but you don't get a real turn and a dramatic turn until you get capitulative volatility. And as you can see, we had that back in 2017, 2018. When it just shot up and it just kept the volatility, it just stayed up high for a while. And those are some big range bars we haven't seen since. And what we got here in March was this bottom happening March and April. The volatility was its highest it's ever been. And if we went from back in June, a high of 14,000 down to a low of 3,850. And that was enough to bottom. Now, we've since rallied up to a 12, and that's a pretty big move. Not to say that it's over, not to say that it's that it isn't just starting. It's just a very big move and an excellent setup. The thing about it was the buy was above the high of that one, so 9,200 or so, 9,300 was your buy level. And if you were paying attention for the last couple of months, we basically spent the last couple of months banging around this 9,200 level. Now that we finally, decidedly, in July, surpassed that level and broke above 10 and are now looking at 12, there's a lot of clear space ahead of us. The next hurdle is going to be the 1,400 area or 14,000 area, of course, but a measured move from 92 to 38. Let's just do that. $53.50. So our measured move would be 14.5. Okay. So that would bring us up to just above the high over here. That's a measured move breakout from the low high range. Takes about this long and gets there. Okay. So 14.5 is, I'm going to say it's pretty much given. I think 15.5 is probably where our real volatility kicks in, and we may break back down to 10 and lower or higher, whatever. But ultimately, we're going to resolve up above 20,000. And the next move past that will be 26. Okay. I'm not going to get to that measurement of why I chose that as my measured move. But, I mean, it's basically, 37. It's basically 20,000 down to 3,000, so 17,000 change. Breakout above 20,000 takes you to 37,000. That's our next intermediate top. Now, that's not our next major market top. Our next major market top is more of a, once people start, so first of all, people are starting to realize, and when I say people, I mean people in the macro world, people in the financial world are realizing that Bitcoin specifically, somewhat crypto, is a scarce resource. And it's an accepted resource. And people are starting to realize that, hey, this is actually better than digital gold, or than, an ETF, I guess, would be the digital gold. This is better than gold because people actually do believe that this thing's there. Tudor Jones thinks it's there. We had the CEO of MacroStrategy report in the earnings call that of a I think it's $1.2 billion company. That's their value. That doesn't mean that they got that cash just sitting around, but that's the value of their stock. They took $250 million in cash and bought Bitcoin. That probably is what took you off of the 92,000 level. But that pretty much has de-risked a lot of things. And so when you start looking at what does that mean now that real live NASDAQ traded companies and Paul Tudor Jones are saying, hey, I'm in this. And Warren Buffett coming out over the last week saying how much gold he bought. People are really starting to get worried. If people like Warren Buffett are starting to get worried about the US dollar, then this is why this thing's going to start going parabolic. And when Bitcoin goes parabolic, it's simple. It ends up at these big round numbers, and it'll shoot to these big round numbers and settle at a big round number. And I remember we started out. We started at like 10 cents, right? Or a penny or something like that. And then the next big move, it went all the way up to, goes all the way up to 259 resolves, but it ultimately resolved up to about 1,000. So you go from 10 to 100, 259, to 1,000, back down to 100 again. Holds it. And I did this. There's another video of me going through step by step what everybody's thinking in all these different moves. But you'll see when these key areas get taken out, you have, so this looks a lot like what we had in 2017, 2018, where we just melted down from 1,000 down to 300, 20,000 down to 3,000. And ultimately down to about 150, banged around there. And as soon as this swing high, this is where the short sellers, this is where their stops are, okay? And also, this 700 level, it's a big round number. So people tend to take profit at big round numbers. The unsophisticated trader, not that we're judging them for not being super sophisticated traders, but I mean, you buy Bitcoin at 10 cents or $1 or $10 or $100 and you say, yeah, I'll sell at 700. Sure. And so this big round number gets hit and these things get taken out. So now this is an intermediate swing high. You have your reversal. It gets taken out. Once this one gets taken out again, the 790, 800 area, you see how fast it rips and it goes up and takes out this and it starts reversing up here. It gets above it, reverses, and all of a sudden, so everybody thinking, okay, cool, selling at 1,200 was the right move. Down to 1,000, haha, told you. And the next thing you know, it's at 3,000, right? You're just like, oh crap. So I'm selling at 3,000 is what everybody said. It doesn't hit 3,000. It trolls everybody, turns down, goes to 1,800, scares everybody to death. I remember this summer very well. And then rallies back up and just blasts off to 5. And then blasts off to 6, and then blasts off to 10 over Thanksgiving. So, in April, we're at 1,000. In November, we're at 10,000, 11,000. So May, June, July, August, September, October, November. In 7 months, we went from 1,000 to 10,000. So we're at 10,000 right now. 1,000 to 10,000 is 10 times. And, all along the way, people are saying 3,000 is the top, 4,000 is the top, 5,000 is the top, 8,000 is the top. And you see the ATR just ripping, right? This thing's ripping. We get up to 10,000, and this happens during Thanksgiving holiday. It basically starts out the week of Thanksgiving around, I think it was 5,000 or 6,000, maybe 7,000, and it ends the week at 10,000. And then the next month, we're at 20,000. So we double again in 1 month. So you go from 1,000 to 10,000 in 7 months and double 10,000 to 20,000 in a month. Less than a month, 2-3 weeks. And then it all comes crashing down and then they roll over into the different alts and we spend the next couple of years kind of in this pit of despair, shorting, and then, we get some run-ups in 2019. And then that ultimately fails. And then we take it to where we are right now, where we just keep selling off to the end of the year, basically 14,000 down to 6,000 to the end of the year. And it just felt bad. And it goes from 6,000 to 10,000 within the first 2 to 3 months of like 2 months of the year. It was a great move. And then they sell everything into the financial crisis. And so all that's happened. That's war. If you look at the chart from 1,000 to 20,000, we've just banged around 3 to 14,000, kind of averaging around 8, 9, 10,000 area as probably the median. So 8,000 would be about the median. So we're now well on our way. 12,000, 14,000, 15,000. 20,000, 26,000, and 37,000. 37,000 being our next measured move. But when we talk about 10x moves that we do in Bitcoin, 10 and 20x moves that we do in Bitcoin, 10x from 10,000 is $100,000. 20x is $200,000 per Bitcoin, considering that 21 million Bitcoins will ever be created. We're at something like 18.5 million of them created right now. And to be fair, I would venture to say that we don't have 18 million out in the markets. It's more like probably 8 million that are actually there, maybe 10 million, because there's been a lot of lost Bitcoin. People mined originally and then just threw away their computers, reformatted hard drives, forgot about it, lost their login, mined but didn't mine into a wallet. There's just so much lost Bitcoin out there that one Bitcoin, I believe, is probably going to be the equivalent of $1 million within the next couple of years, a single Bitcoin. And the thing about it is the actual one Bitcoin itself doesn't matter, because you can buy $3 worth of Bitcoin or 50 cents worth of Bitcoin. You don't have to actually purchase one whole Bitcoin. It's at any amount you want, and that's the thing that makes Bitcoin, attainable to everybody. Is that I can buy a cup of coffee, I can sell you a cup of coffee, I can do everything in that sense. But we know that it's more about acquiring as much Bitcoin as you can right now, assuming that it's starting to play out that Bitcoin is the asset that's going to be the safe haven. It's going to be the world, the standard, the world standard currency, perhaps, that everything's based off of. At least that's what it's looking like right now. So all that is to say, Bitcoin, I'm looking at a move to 14, a move to 15. There's going to be volatility around there, pullback, and then it'll probably rip in a way that just, I know it's, we're likely, people are going to be selling at this 14 level. Anywhere 12, 13, 14, 15, 20, 30, any round number, people are going to be selling for sure. But in my belief, we're going to break the 14. It's going to get volatile for a month or two. We may drop down to 10, wherever, all sorts of excitement happens. But then it'll be a really quick move into the 20s. And then maybe into the 40, 50s, just really aggressively moving higher. So that's my look on Bitcoin at the moment. Now, what I want to point out is, and this is going to transition into the next one, we are currently trading at, let's just call it 12, and the all-time high is 20. Okay, so we're about 40% from our all-time high in Bitcoin. Now that's interesting, but what else is interesting about this is, even though we believe in, a lot of people believe that crypto is a highly correlated asset, it definitely is. Like when crypto starts moving, everything starts moving. And then there's this old, inside crypto where you have, alts, and you have the big caps, and then you have tokens, and you have DeFi, and you have all these different sectors inside of crypto. But one thing's for sure, when Bitcoin hit 20,000 and sold off, Ethereum took off and went to 1,400. So let's choose exchange probably were they on? Bitstamp? They probably have the oldest data. No, they don't. Could it be Coinbase? Yeah, I guess it's Coinbase. So this is December 2018. Ethereum goes from 417 to 800. It doubles in a month. And then Bitcoin sells off, and then everything moves into Ethereum or into alts, and we double. We go from 7 to 1400 in a month. And then it pretty much gives back almost everything. So we're at 400, and the top was in the 1400s. So we're 1,000 points away. So about almost 300% below our highs on Ethereum. And this is the number 2. This is the number 2 most popular, most desired, or as far as market cap goes, this is the number 2 asset out there. And there's plenty of others that look like this too. Let's just, well, I think this is where the ICO'd. Yeah, so EOS went from about $1 to $24 in that same period of time, and it actually did it in April. So this is January, where you get the big high sell off, then a massive run. So this is when the alts really kicked off and did massive work, and they've just been selling ever since, and selling ever since. So now that we actually have this happening, we have very low volatility and big volatility happening everywhere else. So what I want to say is, yeah, Bitcoin has an opportunity. If nothing else, it's going to hit all-time highs at 20,000 something, right? And Ethereum has the opportunity to hit all-time highs. So from 420 or whatever it is, 430. I can see it on my screen right now. I don't know. 433 to 1400. So 1,000 point move there. So you can buy more Ethereum, and your potential upside as a trader is bigger there, as it is with Ethereum or EOS, as it is with multiples of them. But the thing about it is, what's going to happen, generally speaking, is Bitcoin does the major rips, and then eventually the alts follow. So if you're playing the game of chasing the alts at the expense of Bitcoin in order to get Bitcoin, that's fine on a day-to-day basis, but you're going to miss the Bitcoin move. So if nothing else, I have a good chunk of my money in the Bitcoin position, and then smaller positions that have, excellent risk reward that I can lever up on as needed. So Ethereum, as we get Ethereum 2.0, I assume, because like everything is written on Ethereum, and so everything uses the Ethereum rails. With the Ethereum 2.0, as new things come out, they're going to need, Ethereum 2.0 is going to be deflationary, which currently it's inflationary, and that's going to keep it from hitting all-time highs. But where we're at right now, it can hit all-time highs at 1,400 and most likely double and most likely double and double. So we're looking at probably 3,000, 4,000, 6,000 on Ethereum before the end of this run. And any of these other infrastructure type products like that, maybe a better Ethereum, this thing called Algo is something I'm in. And they do a similar sort of thing as Ethereum. Maybe you start seeing problems again with congestion or other things along with Ethereum, and people want the utility of Ethereum, but they don't want the risk that goes with Ethereum. And so maybe they're looking at other type of products out there. You've got like EOS, you got all these other platforms, Stellar. There's all these other ones that you can build on top of. And so those are, the infrastructures are interesting ones to look at there as things mature here. Anyway, so that's what I wanted to put out today. Bitcoin easily hitting the 20s, probably 37,000 is the measured move from here. So that's a triple. That's, 300 times what it's at right now. And then I think before the end of this run, we're at 100 or 200,000 before things really start to top out. And the thing about it is that means you could have 10, 20, 30,000 point moves in a day. So hopefully, hopefully you can handle that and position size accordingly. If you're levered up the max you can, it's hard not to puke out a 10 or 20,000 point move, especially with leverage. You'll get stopped out of there. So trade smart, folks. You can always just be a maximalist and say, you can be a crypto maximalist and just buy everything. Or you could be a, Bitcoin or Ethereum maximalist and just, own that and that's it. Buy your Bitcoin, put it in cold storage and just, wait for the world to end and you're probably good. All right, guys, that's all I got today.